Alrighty. Welcome everyone. Welcome to another late London open stream. We're going to be looking at gold. We're going to be looking at German 40. Going to be looking at pound yen. Probably that's about it. So just let everyone come into the room. Hey everyone. Hey guys.
Right.
Alrighty. So let me just check sound actually. I was just taking care of something. Give me 1 second. Oh, let me just redo the... I forgot to do this. Okay, you can hear, now I can hear music? Yeah, gotcha. Alrighty, so gold's already done a move here. Moved up, moved down, clean candles up, clean candles down. This is that secret strategy that I've stolen and shared to everyone. Let's just clean things up. And then we'll cover. Got some questions I'm going to go over. Also going to talk about something for the opens. So let's just work out what liquidity do we have left to the upside. Still got Asian high from last Thursday, still got London high from last Thursday, still got New York high from last Thursday. We have New York high from Friday. Man, that was a crazy day, Friday. Freaking hell. Asian high from Monday. Now we've got to the downside. We have Asian low from Thursday, Asian 50% from Thursday. This is Thursday week now. So now we need to do 19th Jan. 19th Jan. We've got a New York low. From 19th Jan. We've got the London low. We'll leave it there though. So New York low from Monday. New York low from Tuesday was taken. Was that Wednesday? No, it's Tuesday. Anyway, it's been taken. So move that there. How far back do I look for these POIs? Anything that you think has got a potential to be hit in this week, you can look back that far back. Like I wouldn't bother going all the way down here to like 1879 if I didn't think. Well, I've got like if today is a heavy sell-off and say we close under like 1890, then I'll start going back and looking at the nearest ones. Makes sense? So it's just wherever you think. You just do analysis on the zones above and below where you think price is. Hey Maron, good morning. Okay, so for example, if it stays there for a month as an example and it will still react once it finally gets it, yeah, of course. Because this is like, you got to think of the concept buy to sell and sell to buy. So I'll cover that here, but price will sell to buy and buy to sell. And wherever you have those turning points that's where liquidity is going to be sitting. So where you have liquidity sitting is a good place that if someone is selling, say that is big players, if they want to sell down to a price, they want to sell to an area where they know that they can they can close that trade with minimal slippage. So those areas are going to be turning points. Turning points, rejections, supply, demand, close of imbalances, all this kind, all heaps of things. So it's not like just. A second. Okay. So wherever you have like an area that seems to be like a good like support resistance, wick rejections, supplies, demands, all that kind of stuff is going to be order blocks, whatever you want to call it. Lots of different names. But wherever you get down to a specific area that we think could have a rejection, that'll be where price is likely to go, so that they can close their order with minimal slippage. I'll show that in examples with these opens. Okay, is this why markets basically range about 70% of the time? Because it's just back and forth between liquidity points. Yeah, that's pretty much it. Liquidity to price will move from liquidity to liquidity. Because they just want to, it makes sense for whatever they want to. Like when price starts trending, it's usually on the back of fundamental news. And when price is just ranging between technical levels, then it will just be going from when the algorithms and all that kind of stuff kick in, they're just moving price to an area that can be filled, picking up orders along the way, doing like sort of reversal sort of patterns, and then going to the next level of liquidity. And they're constant. Like the algorithms aren't just buying one way. It's constant. It's a constant buying and selling all the time. So you'll see price be selling, buying, selling, buying, selling, buying. They're constantly just. It's a difficult concept to get around, because if you're just selling and buying all the time, so let me just get my pen. Buying and selling, buying and selling, buying and selling. They're constantly getting the different average price. And then eventually once it gets down, they can be making money selling and buying. And then once it gets down to like a pool of liquidity, then they can close a lot of those orders, because there will be like a larger percentage of people ready to buy those sells down here, so they can close those orders because they've got a lot of buyers at this level. And then you'll see price will just manipulate around a bit, and then you'll start to see it push back up, and it'll come back to a level of exit liquidity, and then it'll do the same thing, and that could push down. Then you might have some fundamental news, and that will reprice things, and then it will start to trend. It's good for me to show this in examples. But let me just fix up these, and then we can have a look at what happened. I think we've got a bit of time before the next trade. So New York low has been taken. New York low has been taken. New York low has been left behind. So this is from Friday. For a lot of the times last week, the New York session made the high and the low of the session. Of the day, sorry. Pretty crazy volatility last Friday. Last week. I can get rid of that one. I can get rid of this one. I can get rid of this one. Then now it becomes the low for today. London low. Get rid of that one. That will become, let's just put that in there for now. Asian 50%. 1929.35. Okay, that's good. Has the German news come in yet? The Germans, normally the news comes out earlier. If there was. What are you talking about? Oh, this one? German prelim, GDP? Must be. Yellow folder. Okay, so New York high, we have New York low. We've got a London low put in at the moment, current low. We've got Asian range. And then we've got our 50% in here, 50% in here. Where's that London 50% from Thursday? $19.39. I'll put that in. All right, so thin black lines are some POIs that I had done from a while ago, from like I think April. They're usually like imbalances, like that's just top of clean candles and doji highs. Now we've got our relevant markers for previous sessions, session highs and lows. So some of these are going to be daily highs and daily lows. And then we've got our darker black lines, which are these are monthly close levels. And then we have our, I'll check German, Marin. Then we've got our light grey boxes, rectangles, which are just areas where prices acted as support, acted as resistance, that kind of stuff. So because we're broken out to the low side of Asian low, I would say that there's a higher chance now we're not going to take out the Asian high. And then what we could do is just maybe we can form some bearish structure and then be looking for a sell-off today. Down into this area, perhaps to fill this wick. Now I'll go to German and then I'll also talk about that concept, buying to sell, selling to buy. So this, I actually was very tempted to place a buy order down here. Why? Why is that? And I'll show you. I hear you guys asking. You can see this was the open on the 15 minute. Let me go 30 minute. So these two candles was the euro open. These two. Okay. These two here were the euro open. And then we had London volume come in. And now what happened here is that we shot down to this area and then we've had a big reversal. So what happened here? What do we think happened here? Got some news, comments, breaker structure. It was before the news, yeah. Nope, not manipulation. Well, it could be considered manipulation, but what it is was sell to buy. So you can sell down to get a good price, just to buy. And that's how the market will move a lot of the time. Sometimes it's extreme, sometimes it's just small. But let me show you, let me put on like the session so we can identify each session. Yeah, I'll just go. Let me just do this very quickly. It won't take long. So if I go to like the start of the yellow, we're looking at just concentrate on the yellows and the pink areas. Let me actually just turn those other ones off. Okay, just the yellow and pink. So we're going to look at. So see how everything was pushing up, and then as soon as the euro opened, we pushed up to go down. So we bought to sell. London sold to buy. And you'll get like these little moves. Obviously it sold again, but I'm just talking about like near the opens. Previous day, sell to buy. Buy to sell. Buy to sell. Buy to sell. Previous day again. Sell to buy to sell. Buy to sell. See what I mean? What I'm getting at? We'll cover it more in detail. I was actually going to do a video on it last night. Price is sort of drifting up. Buy to sell, buy to sell. When they do buy to sell, that's when you think, oh my God, just difficult. It's a difficult day when it's like that. But this one, London Open, sell to buy. Over here again. Sell, oh, just crap. It's just a crap day. So sometimes, like, you know, it's going to give you rubbish like that. But then London, buy to sell. And this is what we did on pretty much that other, was it last week? It was last week, wasn't it? When we, what day was it? I think it was this one, wasn't it? Was it this day? No. What day was it? I think it was this day. I think it was Tuesday, wasn't it? Or Wednesday? Wednesday. It was Wednesday. This is this one here. This is exactly what we did. And that other thing that we did is that when we had identified areas of potential resistance and a POI, and that when the market was opening, I remember I said I was only looking for sells, and then I did get in a little bit early, like here somewhere, but I was only looking to sell. And then what happened was it bought up to sell. Yeah, I know, because that stung you right there. But that's the idea. Let's think about that as well. Buy to sell, selling to buy. All right, now let's go. Let me just put the other things on and turn this off. Alrighty, 5 minute. Do you think the 5 minute doji gets retested again before moving up, or it now goes north without retesting? So I think this doji down here you're talking about, or these ones inside of here. Down here. Yeah, it's pretty far away now. It's pretty far away. What I'd want to do is look and see maybe you see, like, we're pretty much just consolidating over here, and that with all of these candles had once been solid in one direction. So this was solid red and then just bounced up. So it's bouncing up off this monthly level, which has been finding difficulty getting above there before. It was a S2 on pivot points. Oh, okay. You had a buy limit for 1-to-1. Oh, you actually got in there for a 1-to-1. Awesome. So pretty much the same trade as last Wednesday. Where would you put your stop though on this one this time? Did you have it a little bit wider? Or was it underneath the supports? You had it under this wick. Yeah, okay. More conservative than last week because of last week's result. That's fair. Okay. So that's why your risk reward is only 1-to-1, because the stop was quite wide. But you know, you'd rather take a 1-to-1 than a -1. Okay, so because so I've had this in, I can't remember how long I've had this. This would have been in since Friday a week ago. Since Thursday, Friday, I would have had this zone in here. So if I had this zone in here, we've got previous rejections, fake out, plus rejections here. So, and if you're what price was your buy limit? But I'm guessing for it to be a 1-to-1, and if your stop was underneath here, then it would have basically had to have been around this level to get your 1-to-1. So what you could have looked at is if price has to go down that far to pick up that monthly level and to pick up like this zone, and we can move it to like the borders, like the bodies of these candles, and you've got this liquidity candle and you've got the wick halfway through. So this is roughly that we were taking that entry. Then stop loss underneath here. We don't always need to use the lows, because if it is dipping down this low, it's likely going to take the low anyway. So you could have used like halfway of even this wick, because that's a lot of traffic it's got to get through from here down to the monthly level, down into this zone, underneath these wicks, through these closing prices, then into this order block here to the left, and then underneath it. You could have, in this case, that would have still been a nice wide stop loss. Like I won't often myself be putting stop losses above highs, like swing points. I'd rather look at, like, remember, oh, okay, you were very concerned. Oh, okay, you're using ATR as well, so it's like a volatility stop. Yeah, okay. Like looking back at last Wednesday's, this one here, like remember my stop loss was like in here somewhere, rather than above that wick. So even that is conservative. So, but it's all, you know, the good thing as well though, the lesson learned was that it wasn't too, you didn't keep such a tight stop loss. But that stop placement is pretty important. Okay, so now we're coming down over here. Well, the Aussie session, everything was quite bullish for international stocks, world stocks. So are we just correcting some of that move now? US 30 sort of coming down, and German 40 follows that a bit. So you do have some correlation there. But the daily is hovering here. So I'm not really sure what we're doing inside of this area. 4 hour, we're stuck in this range at the moment. That was a nice little buy from the bottom of that range, and it was a nice sell down to that area too. So leaving this zone, these are the times that if I was only looking to buy, these are the times that you can sell down to that level as well, because there's plenty of space. It does seem like it's going to retest that area, but I need to watch this for a bit, because we're clean candles down, prices pushed up. Now if we could have a support form and then break this candle low, then I think we can continue driving down. Oh, hang on a second, I forgot to do something. Wait 1 second. Okay. Yeah, so let's look at the 5 minute. Really want to see a support form and the support broken, because at the moment the range is here's like your resistance. Here's a little support. So we've broken that support, and now we've got another support down here. So the range is this large. So would be nice to enter as close to this as possible to go down. If this just drops without me, then it's a little bit, because of the size of this rejection, it's a little bit risky for me to enter here, because price, I'd rather wait for that retest and then come down. So I'm just going to be, because it's Monday as well, I'm going to be quite patient.
Gold's on movement.
Let's have a look. So what I'm kind of looking for is, here's my idea. Wait for a retrace. Or support to form and support to break. So let this become a support. Let it form a resistance to push down. Something like that. Or wait for it to do and potentially could get in, say, somewhere around here. But don't enter here, because you're basically trading in the middle of that area. Like if you think we can go at least halfway of a clean area, then halfway puts you around here before it could reverse. If it just moves down, ask yourself how you could have been part of this before, and that might have been by once price was pushing up and breaking the support. Maybe we could have been in, say, here if we're ready. But yeah, looks like it's going down. Right, let's just load another chart up here. Two more charts. One's going to be gold. Hey, nice. Oh, he's muted. Cool. That's good. And then this one's going to be pound yen, pound US. We'll have a look. Oh my gosh. Far out. Well, not waiting for that now. Gosh. Let's check financial juice. Yes, sir. It was that was big. That was a big move. So retest area for second time, chance of breakthrough is higher, or another sell to buy. Well, after it's done the sell to buy or the buy to sell, then it becomes like a little bit more tricky to see what are they gonna keep on doing. Like, are they just gonna keep on consolidating in this area, or was London, like, because you've got two opens, you've got the Euro open, you've got the London open. So it was now London buy to sell. Now that once they've, what are their targets? And that's now we can say, well, usually if you've got clean ranges, you can fill those clean ranges. But now getting through all these areas, now when we need to see how much volume there is to push through that level. And that can be harder to work out. So that's where you need to sort of just watch and get a feel. And like, if you got a trade idea, like a trade idea could be traded in a specific range, and now to see it break through, it can be hard getting into the move once it's already moving, because now your stop loss is going to be in a, not going to be in the best position unless it's really wide. So sometimes I don't want to put, when it's moving this fast like this, unless I'm in the trade, I'm gonna watch it and then see if there's something I reckon, especially on a Monday, because every single week when you have the weekend, I didn't get a lot of time on the weekend to review things. So it's pretty much the first time I've opened the computer up. I've been dealing with a couple of things. So now just sort of watching this, I'm happy just to watch and get a feel in the market for what's happening. Once I've got a feel for it, seeing like where the trends are going, if there is a trend, if there's been supports formed, that kind of stuff, then I can start to put an idea together that I'm willing to take some risk on. At the moment, I'm pretty content just to sit and watch and then make sure that my levels that I've got are still holding, and that just to give it a little bit of time to see if there's some levels that if I haven't got on, that I need to apply. Because we only need to make a little, like, really only need one trade a day. If you're getting a good accuracy, and even if it's not like huge risk reward, if you're only making like even if you're doing like a 2-to-1 and you're getting that, or 1-to-1, most days over the course of the week, like, it really does add up. So like, I'm more than happy to put some ideas down on the table once I see something that I really recognize. Yeah, this is just a train now. Crazy. I wish I got up. I was up early actually. I was up early, but I wasn't able to do at the charts. Got a monthly level at 1501. Oh, okay. It's not. I don't have that. I got 15037. Where's your monthly level? The monthly was a weekly level. Yeah, I've got nothing in here. Definitely no monthly level. Not on my charts anyway, sorry. I'm not saying there isn't. We're always looking at key areas to enter, but on a move like that, who keeps selling? Is that all algos? No, it's just volume in the market. What my long-term idea or view is that the market needs a correction. And there was an element of fighting the Fed. Just investors believing that the economy is they're going to have to pivot. Interest rates will have to be lowered because the economy wouldn't be able to support. Everything's so expensive, like housing, and then even getting a loan, a mortgage for business or anything is very expensive right now. So there was an element of everyone thinking that was going to break, and no one wants to be in the move late. So that's why money will move before news, because all this anticipation. And then when the reality is starting to sink in, that the interest rates are going to be probably held higher for longer, and that isn't going to be this hump, then eventually the reality is going to sink in that all this market is being currently sustained on money that was pumped in through stimulus, and then as the realization that it's going to be that market conditions are going to be tighter for longer, we're going to need to have a correction. Like interest rates they've gone up in the US the fastest in history, not the highest, but they've gone up the most rapid. And then even in Euro, interest rates were so low, 0.1 for such a long time, and now they're increasingly getting steadier and steadier and steadier, pushing up. But prices still near all-time highs, closer to all-time highs than they are at the start of the pandemic. Like this is the start of the pandemic, roughly around here, where the cursor is. We're still closer to the highs. So how high is it going to, like, surely I'm not going to marry that idea, but I believe there would be a correction coming, more likely. And it's all going to start with Wednesday's Fed meeting. So maybe we are going to see I wouldn't really want to be holding long-term buys, even though we've been bullish for so long. I could imagine that we're going to have that correction. But selling's difficult. Selling long-term is difficult. Not selling for like a trade like we do, but selling long-term is not steady. Buying is steady. Selling is difficult. Like when you buy, you get generally nice trends. When you sell, let's look for a selling trend. It's really rapid, really explosive. Like just straight down, and then the pullbacks, you get a lot of like second structure, even third structure pullbacks. Here's sells. Here's a trend selling hard down, sideways, hard down, big pullback, chop, then all the way down, range for a long time, pull up, like usually like one or two candles are the biggest candles, and then up, down, big correction. So it's, yeah, selling's hard. Selling's hard, whereas buying, look at the sellers. But then when you look at buying's much more, it maintains structure a lot better. So where are we? Back in December now. Then you look at buying. It's much more, feels like it's much more steady, and previous lows hold a lot more. So if we're going to be selling, what I'd be leaning towards is not thinking that we can like burst through all these targets for price to go down, but it to be a bit more of a whipsaw. So if you've missed the move on the way down, if we've missed the move like on the way down here, a lot of the time we'll get those deeper pullbacks to give us other options. Hey George, how are you, buddy? Okay, so let's just check gold for a minute. So my bias is selling for gold. We created support. Now, how high can London push? So this is the London open candle. This one here. This is our London open candle. So Asian sold off. We've got a little bit of an imbalance. So we've got, or let's just call it a clean candle. This just to clarify as well, imbalances, fair value gaps, all that kind of stuff. There's many people have looked at these and then seen that if price comes down cleanly, forms a support, we can push back up through these clean candles cleanly. Smart money concept by, I think, Michael Huddleston or something. He glamorized the concept called fair value gap, which is the same thing. I'll say all three terms because I've never studied ICT, never studied inner circle trading, never studied smart money concepts, but I'm aware of it. I'm aware of what I've learned from all of my mentors that I've had, and I've slowly made my own style. And this is, yeah, I might use a term that someone else has used, and I might call it another term that someone else has used, but clean candles, imbalances, it's all the same thing. There's nothing new in trading. If anyone says they've got a new concept, a new strategy, a new style, it's not. It's nothing. There's nothing new. This has been around since like 1910s kind of thing. It's just people have actually labeled it a term. That term is stuck. People have understood what it is. Now they're able to like draw it. We'll all draw things slightly differently, and I'll just draw things the way it makes sense to me. And if I can put the information together in a certain way that helps other people digest it and absorb it and learn it and be able to teach it, I'm not stealing anyone's ideas. All I'm doing is putting the information together in a way that maybe others can resonate. So look at what I'm looking for is London session, just to drift higher. Maybe we can, maybe at some stage we can put in a London high, and then we can look to take a down move. But I wouldn't want to get into a sell here, right here, because we've got this clean candle that once we've formed a support, price needs to go and form a resistance. And once we've got a support, and once we have a resistance, now what we have is a range. If this range is X amount of pips, then potentially we can trade it. So if it does come up to here, then we're going to have a 70 pip range. If we've got a resistance formed, price has gone down, price has made a support, price has come up, price has made a resistance, price breaks the low, then we can at least look to get maybe a down move. Even if this is just going to do this, maybe we can get a leg down. That's at least 35 pips. Now, can we trade 35 pips? Yes, that's a big enough range to trade. We can trade it then. If it forms a resistance here, right here, and the range is that now only 35 pips, and I think, well, can I get 20 pips? Then that's now, I probably won't take it. I'll watch it, but I won't take it. If you guys want to take it, or someone wants to take it, that's up to you.
I took it at support, Hayden.
Okay, you took it from here?
Yeah.
Support as in
After that 30 minute,
over here?
after that 30-minute bullish bar closed, and then the retrace.
Oh, good. So like you got in on this week, did you?
Mm-hmm.
Cool. And how's your weekend? You recover?
Yeah. Is what it is.
Yeah. Oh,
Just studied.
some people took it as well. Nice. Well, Danny, you waited for the 30-minute candle to close, did you not?
I waited for the 30-minute candle to close.
Yeah.
It's rejecting off a monthly level and a 4-hourly support.
And if we're looking at this as an hour candle, the hour candle's like this. So once you've got an hour candle like that, if this is actually bouncing off a support and you're measuring that candle and the body is closing above the halfway, then the question we need to ask is this going to be for a wick fill, or is this a rejection? So if this is a rejection because we closed up, like the wick is longer than the body, and then price pushed down and then started to push back up again, and you got clean candles above it, then this could indeed be a rejection, and now you've got more upside than you have to the downside. Because like, what do you if we go to the hour and we look at this candle body, we can see that we've got big candle body, big volume for a lot of sell side volume, and then we've got a small body candle, and we're at levels where price is previously rejected from to the left. So with a candle like that, once you've already pushed down for London and Asian session, down 140 pips to the downside, how much more downside do we think there is versus how much upside do we think we could get for a, maybe we're not holding a trade for that long, but where's more room?
I thought upside.
Yeah. And that's what you're trying to do, is that you're just taking the probability of the move at the time that you're looking at. And that's what it really is all about, is that it's all about probabilities. And someone could be looking for sells and saying that's risky because the moves were coming down and the previous daily candles had been showing bearishness and were quite high around these 1950s. And that's fine. They might say that that's a risky move taken to buy in a condition like that. But it depends on, everyone trades different styles. Everyone trades different time frames as well. Like if I was taking a trade on the 4-hour chart and you're taking a sell down here, I'd say that's risky as hell. I'd say taking a sell more or less here is risky. But if I was looking at it and taking it on the 5-minute and saying I'm looking to take a sell, like I've taken sells like here when I've seen something like this. So let's just put this in perspective. Say we've got a little support, we've got downtrend. This candle here is closed below this support, and then if this one's wicking up, you could be looking at something more or less. Let's just say someone's trade was down to this support zone. I'll make it wide so we can see this on the 4-hour chart. Okay, let's say someone's trade idea was this. I mean, I've taken many of these in the streams as well. That pound yen was one of those. That once we basically took a break. I think last week's trade only closed 25% at that point. Once I was up, was it 12 pips? I think from memory, and then the runner got stopped. But I'd say that was to me on the pound yen trade, it looked like a safe sell. And now if I look at this on the 4-hour chart, and then saying like I'm selling when this candle was bearish, like here, that 5-minute trade that actually looked fairly safe on the 4-hour chart looked pretty risky because all of this are rejection wicks. So the volume that's been picked up in Asian session and Euro Open and London Open having already traveled from here down, basically 140 pips, it's already covered a long distance. And where's the real, like the resistance? It started from here. So eventually at some stage, the further you get away from resistance, the more likely there's going to be that pullback. So if we're, and I agree with that. For me, my eyes, I see the counter trend opportunity easier than I see the trend trade, because sometimes I'm waiting when price is consolidated. I don't know which way it's going to go, and then eventually, like, if price breaks out to the upside, I'm like, oh, okay, so I went to the upside. But I wasn't 100% certain when you're consolidating which way it was going to break out, because it can do this. But once it has broken up this way, this side, and if the move has been steady enough one direction, gold is that asset that has that double-sided volatility, that if it's broken out one side cleanly and we've got to an area of either support or resistance, depending on if it's breaking to the downside or the upside, and then it shows us price action signals of it slowing down, then we know that there's going to be a counter trend, a pullback. And I find that move easier because I can piece together the right time in the session that it's likely to do that pullback, like it'll be after the open. Now, and I'll take that kind of trade. Now, if I'm lucky, the bigger picture could be that this actually now starts to go down, and that this was just maybe a higher time frame break out one way just to come down and then eventually do this. Because sometimes these breakouts are going to be sometimes the breakout is just a wick and then it comes straight back down. Or if you look at a lower time frame, that'll be at train tracks. Other times it breaks out, closes above, pushes up, and then comes back. And then maybe it looks the same as just the wick, but maybe this is just a daily wick. You know, that kind of makes sense. Yeah. So then what we're doing is we're trying to piece together something that's objective, something that's repeatable, and not just we're trying to put that feeling into words so that we can put it into like a trading plan. But if price is pushing down, forming a support candle, there's a very good chance that once you've got a support formed at support, like at a previous support with clean candles, how often do we just get one bullish candle and then the bearish candles start coming back in again? Most of the time when you get one candle like that, a lot of the time you'll get a second candle. Now if you can get down and get in the trade somewhere on this wick, then you can actually get into a trade where you can at least manage some of that risk by the time you get to previous rejection areas. Or if you've seen this many times and you're quite confident with your direction, maybe based on fundamentals and higher time frame, maybe you're thinking that that was just a fake move to the downside first. There are other things where it's like, if you see a big bullish candle, let's say, where's this music gone? Is it still playing? There we go. Let's put this one on. If you have a big bullish candle, sometimes the eyes just have a continuation candle. So let's just go to remove this for now. Sometimes when you do get one-sided volatility and it breaks out, creates a big candle like that, and then the next candle is a small body bearish candle like here. Where's your A plus setup? Draw my charts. Where's your A plus? I'll catch you, Glenn. Where's your A plus setup? A plus is in like, where's a really high probable setup you can get? I haven't said where it's selling or buying, but mark on the chart, the breaking of something is going to lead to an A plus setup. Someone want to have a go, draw on the chart? I think Danny drew a little dot here. Maron's saying down. Yeah, so we get some mixed ideas. If Danny's one played out and this was the candle that happened next, then I would say Danny's idea to the downside to fill this candle is an excellent one. Now, what you'd really want to see is that if this was at resistance. Yeah, you could ask what time that red bar is happening as well. But the other A plus setup is not that rejection here, and say we just pushed up and then we have had a little bearish candle like this, is that if the next candle wicks down and it starts breaking the high of this one or the bearish or the bullish one, that's an A plus setup.
Continuation.
Yeah. But you'd want to see it breaking above these kind of things. That's an A plus setup when you've got volume in the market. So you'll see that a lot of the time, that when price, but what you want to see is a big candle followed by a little candle. If you have a big candle followed by a little candle and then you're breaking above the high, it should do at least a wick fill, and it should go up to a previous rejection area or resistance area. Now, if you see, so look at this candle, okay? Look at this one. Big bullish candle, little red candle, well, smaller body red candle, and you've got an area above it. That once we're breaking above here, most of the time, this wick here is annoying. I'll talk about this wick in a second. But when you see like a big bullish candle, little red candle, and then closing above, then it usually will go to the resistance, the next level. Doesn't have to close either. You can take it impulsively because it's usually a pretty good setup. What happened in this instance, this one here, what do you guys think? This one here. Oh, sorry about that. Problem with some of these trades, when you're looking at on like the 30 minute, the 1 hour, is when you're getting close to that bloody New York session, it can stuff you. So I really like these setups after the London Open or on the lower time frame when you've got more space. When you're going into that, like I hate taking trades and having them open and going into New York Open. They very rarely will last. They'll get whipsawed out. but this one did not close above the wicks, so it's more ranging. Well, yeah, you could say, but where you'd be taking it would be if it's wicking down. You'd be taking when the candle's open. A lot of the time, it's not always perfect, right? But you see this one, big candle down, little body, and then when it's breaking the low, you're just looking for continuation. But something to be aware of, like when you see big candles, big bullish candle, then a smaller body retracement, and then when you start breaking the high again, it's continuation. Because what would that be? What would that be on the lower time frame? On the lower time frame, this moved up, came down, moved up, came down, moved up. So you're looking at the trend, and you're looking at it to be a breakout, like going just extending the trend. So if you can start to just not necessarily trade them, but be aware of them. Big candle up, little candle, and then pushing up, leaving that wick, then it's continuation. Because candles should more or less, when you look at when there's volume in the market and there's trends forming, price should be making higher highs and higher lows. See how the lows were all higher until they started breaking the lows, and then the trend started going. They started being a bit more of a pullback, where we started leaving lower highs until we started breaking the highs, and then of course it just started ranging. So it's really when there's volume in the market. So London Open, you have initial volatility, or even before London Open, then you have small body candle, and then you have something wick down, and they start breaking the high, then there's a good chance it's going to be continuation. There's better chance if what can happen is it can break the high in the first couple minutes, and that can induce people to get into the trade too early, and then it will come down. And if it starts respecting the low and then starting to come back up and breaking that high again, or this high, then you know that the wick has been formed, and now volume can just continue pushing the candle up and up and up. And that's usually a really good trade. Taking it on the very first break in the first couple of minutes is dangerous, because it could be the scenario that Danny pointed out. We could have a candle that closes like this, which would be the opposite signal. This would be a signal of reversal. This would be clean candle up, resistance form, resistance confirmed, liquidity grab, wicking up, and then breaking this low can be to fill this candle. And that will happen more often when this area is at resistance. Okay. So just a little bit about some of these price actions. Okay, so we get into the area where this is that gap filling now. So, are you still in this trade, Danny? It's been a 40 pip move up.
Yeah.
Good one.
I took 90% at the imbalance. I had the same imbalance area as you.
Oh, good. You just did it then, did you? Basically.
Yeah.
Cool. All right. So, can we get some acceleration resistance form to retest these lows now? So, I'll keep my eye on that. What's German doing? German's just ranging. Pound yen. Pound yen's in this range. Let's have a look and see. Just try to get an idea. Big body up, smaller body, still making higher highs. We've got a resistance across here. So a bit of a attempted liquidity candle. Can at some stage it do a retest of this wick? If that's going to do a retest of this wick, then that means that there should be some downside movement. But we've got clean candles up. We could, if we wick down, start breaking this high, then we've got clean range up 30, 20, 25 pips. So can we get, this is what I was thinking. Can we get, what's going to happen above this resistance? So let's just put this in. $15-minute time frame is not my favorite time frame to be taking a trade on. But we've got a support formed. We've got clean candles to the downside. This is continuation. So anything that's leaving this low has got much more downside potential. So we could look at taking. Don't think it's going to happen here, but we can do like easy one would be trades below 160.8. Trades above, it's not enough range, but this is a potential area it could fill. I need to see candles. Six 1.18 could be indication. Yeah, this wick here. I'd rather be selling. But now, if I can see rejection and then price breaking the lows of a candle, I need the price action to develop more, but I could get around trading something like this, anticipating something like that. And if I go to the 5 minute and the second, if I get a breaker structure on the 5 minute, then maybe I could even get a really tight entry. A shift in structure would be something breaking these lows and then taking the pullback. So this one just needs to play out a little bit more because I can see upside and I can see some downside. Maybe there's going to be more legs inside of here for sure. So this is, the stage is set, it's going to be a waiting game. Goldilocks. Let's see. Hey Abdullah. How are you, buddy? Sorry, another question. If the price broke 1925.2, can we take this trade? 1925.2. Oh, okay. This is, we probably said that actually a while ago. It's hindsight now, so I won't comment on it. Okay, 10.17. Have we got the high in? Is this the London high? So this candle can tell this candle and the next candle will tell a lot of the story. Worst case scenario for taking a trade would be if this candle is too big, something like that, because then it's pretty hard to take a trade at that time. If it closes something bullish like this, sorry, bearish, what it was like a second ago, then breaking the high and then closing bearish again. So say it closed something like this, and the next candle close something like this, then breaking that low is an easy one. But if this keeps on printing new highs, the higher it goes, the easier a trade can be for the downside. So I don't mind if it just keeps on pushing up. We'll just keep on adjusting that high. And once we've got a high and we've got a proper resistance form or a liquidity grab or rejections, we'll have a halfway point then. And then that could be the target, the halfway of the London low and the London high. So let's just see what this guy's going to do. It's got another 10 minutes for this one. What if I would look at the 10-minute chart? Yeah, you can look at even like the 2-minute chart. Price action is price action. It happens with every single time frame. Just because a lot of platforms by default will give you 1 minute, 5 minute, 15, 30, 1 hour, 4 hour, daily, weekly, monthly. They're not the only time frames you can use. You can use 10 minute, 20 minute, 30 minute, 40 minute, 2 hour. You can use the 2 hour. The 2 hour chart's not bad. 2 hour chart, like the price action is the same. You know, you still get the same sort of characteristics. Accumulation, clean candles up, accumulation, close below, wick up and push down, fill the range. I know there's a fella who was showing me a strategy he had on the 49 minute. He backtested all the time frames, and for a particular pair, the 49-minute chart gave him best results using pivot points and EMAs, 50 EMA and something else, but got to be careful what you say these days. How can you see 49? Oh, I can just change interval, 49 minutes, and then enter. Now this is the 49-minute chart. Some people use the seconds chart as well, like 30 seconds chart. It depends on your platform. I know the one that a lot of the guys are using. Yeah, no, they can't. Not there, because it's you're at the mercy of the developers. They choose what you use. If you use I don't think MT4 can use it either, but MT5 you can. I think. Here's my MT5. So, time frames, customize. Oh no, they can't do that, but you get these options. So you can do the normal. These are the normal guys that you can use. That pretty much is the stock standard on everything. But then you've also got 2 minutes, 3 minutes, 4 minutes, 6, 10, 12, 20, 2 hours, 3 hours, 6 hours. German 40. Three times one-on-one on actual strategy. Oh yeah, because when you measure these two the Euro Open actually did nothing. It was relatively small. So when we look at that time 7 to 8. Yeah, when you've got a small range from 7 to 8, that 1-to-1 is a lot easier to get than if the range here's 7 to 8. No, sorry, that's 6. That's 7 to 8. Let me zoom out a little bit. Let me go to our chart. So we're looking at the second bar in the yellow zones. I'll get it so you can see today's as well. There's the range. There's the range. There's the range. There's the range. So when that range is smaller, like today's been the smallest one of them for the last 2 weeks, then you can get 1-to-1s a lot. You're just sort of looking for that. You're looking to see what price does, the highs and lows. I'm in the middle of back testing something that is Null here. No, Null's not here. They were going through using for the COMEX Open for gold, and that's the 1:20 p.m. UK time, using this 5-minute candle, and then seeing how price reacts to it. So I'm really interested in seeing some of those results, doing the back testing myself. Okay. Gold still not doing anything. 15 minutes is closing in 3 minutes. It's going to tell us what are we going to get. If we get, I'd love to see a small little bearish candle, and then we can take the high. I'd love to just put that in action. Just before NYC. Oh no, NYC is at 2:30 our time. So the US, you have 8 a.m. This is in US time. I'll do NY, UK, and Sydney. So it's 1 p.m. and that is currently, so summer months in Sydney, winter months in the UK, that is going to be midnight. That's US Open. That's when like banks, businesses open. Then the next one you have is at 8:20 a.m., 1:20 p.m., 12. I'll do 24-hour time. 00:20. That is COMEX, or the new name I think is NYMEX, which means Commodity Exchange or New York Mercantile Exchange. So it's when like all the metals, commodities, oils, wheat, all that kind of stuff, that's when the trading starts happening for them. Then you have 9:30 a.m., which is 2:30 our time, or Sydney 1:30 a.m. And this is New York stock exchanges. So the DAX, so not DAX, NASDAQ, I was meant to say, NASDAQ, Dow, S&P 500, those exchanges open. So they're the three volatility times. Much better. Then you've got 10 a.m., which is we call it the Harley Quinn candle now because it's a psycho candle. The Queen candle, or Quinn, Quinn. But that one there, that's when you get craziness. That's crazy. I'll just say crazy. So if we have, think about now concept buy to sell, sell to buy. So when you have COMEX open, a lot of the time, you'll get a 5-minute candle that'll create a high and a low. And then you can have, think buy to sell. So maybe it will spike up, buy, and then once you get something closing below here, this could just be the fake out. So bought to sell, and once you're back underneath the COMEX open candle, then maybe it's more steady moves until the close of the 4-hour candle, which is in here at 9 o'clock or 1 o'clock. Oh, sorry, 2 o'clock. My bad. So we're just looking at using everything I do. I think if you had to like say when I'm scalping, it's about timing the market. And it's about the move that makes sense at that specific time. Yeah. All right, so 15-minute closes. It didn't close as anything. There's just a bit of a doji. So now, can we push up here above it? And could this be a liquidity grab? So is this going to be am I anticipating that this is going to be a liquidity candle, or are we just going to continue filling up this range? 30 minutes close now, close quite bullish. So what is this candle going to turn into? If it wicks up, starts breaking this low, starts pushing up again, and then tries to extend that low, I'd be pretty keen to take a sell on. WTF, no, still up to 1933. Up to here, you think? Potentially, yeah. Potentially. It depends on where this high is, and depends on what happens. It can always get to 1933. The question is, how does it get to 1933? That's the question. So when you're asking how does it going to get there, is it going to go up like this? Is it going to go up like that? How we're going to, if it's going up like this, am I going to sit here for how many hours until it gets here? Do I just set an alert here? Am I fine just to take a counter trend trade? If it creates new structure, am I happy just to take a trade here? What time is that going to fall into? Am I going to be at the computer at that time? They're all the questions that you can ask. And ultimately, I don't care where it goes. I just care about getting my trade in. If you think it's going to go all the way up to 1933, are you in the trade already? Are you going to enter here? Where's your stop loss going to go? I don't know. So this it was a comment that just said up to 1933, but I'm not sure about the analysis. What's the reasoning? But it will be interesting to see what it does with this doji high. I'll check pound Aussie in a second, Marion. I just want to see what it does with this doji high. I'll get set up. Oh, pound. See, yeah. Candle. I forgot it. I forgot the look. Candles closing above 161.8. Well, I meant this line here. Can go another 30 pips. So I never got to break a structure. If you're gonna look for sells, we needed to see that low taken out. But it had that easy, well, clean push up. So nothing to do here yet. German 40 just consolidating still. This is now getting interesting. That I'd like to see a sweep. I'd like to see a sweep. Double bottom, something, triple bottom, yeah, that kind of stuff. I'd like to see that. We'll have a look at pound Aussie in a second. Let me just keep an eye on gold. Little resistance breaking. 1 hour. Plenty of clean candle. Oh yeah, there we go. One hour makes a lot more sense. Just to keep on pushing. So that's, I'm just waiting for this high to be put in. What does the circle in the candle mean? It comes and goes, I noticed. This? I've got no idea what it is. I think it's called a marker. I think it's just something like on the code, the background, to like anchor. So I think every few candles it'll be put in the middle of the body. And I think it's just so it, like when you go to scale, I think it looks to, I think it just tries to make sure it's all scaled. It's only when you click on the candle it does it. So I'm not too sure though. It was annoying me a lot when I see it like that, it annoys me. You re-entered with doji taken on 5-minute and 1 hour time frame confirmation. Re-entered with doji taken on 5-minute and 1 hour time frame. Cool. Come up to Asian 50%. Aaron's keeping his eye on RSI, MACD. So daily now, starting to, oh, it's just flipping bullish again. All right. This is where I'm going to ready myself. This is the perfect area to reject from. I'm looking at selling. I want to see how this 5-minute candle closes. And I'll be interested in selling above it. But I need to see how this 5-minute closes. H1 no, not really. Not really. It's just the halfway of the Asian range.
Sorry, Hayden, I was talking to Mirren.
Oh, good. I would consider how this candle closes will give me consideration for that. Stops 10 pips above the key level. Low risk, 3-1. Low, like I would put low risk on this one though, because it could just blast all the way through. Five minutes is coming to a close. Catch you, Danny. Good work today. Okay, 5 minutes is closed. If this pushes up now, I'm going to enter on that one. But my risk is low, right? So if this can push up, oh gosh, do it. I want it to push up, break, and I want this hour candle to close with a much bigger wick. Because that'll be showing a rejection from this area again. If it just breaks the low and goes without me, then that's going to suck. Because I was too fancy on the entry. Let's see, hopefully it can do one spike up. I'll give this one to the end of the hour to do it. Give me 1 second. I'll be back in 5 minutes. Alrighty. Yeah, potentially it could go higher. So I'm keeping it low risk. It's just getting to that time. The time I'm looking for an entry here. No, thanks, Aaron. Yeah. Good reminder. Come on, give us that wick fill. Wick fill rejection. That'd be a nice deep retest for this 4-hour candle. Potentially. Potentially could go higher. 5-minute close at no wick. Oh, not in the trade yet, Marin. I just see that this doji, that try visualize, like, are we going to get something like this? And then could we get like a sweep? Just playing the odds here. Okay, so there's a double top. Oh, good. Okay, so we've got double tops in. Very quick time frame double top. I'm not in yet. It's in on the thing, but my spread didn't put me in. Or did it put me in? Nope, not in. Not yet. Damn it, it touched it. It's alright. It'll come back and put me in. Oh, come on, man. Okay, I mean, wish me luck. Nine pips up. So far, so good. Stopped out. On what, Marion? On gold or pound Aussie? Gold. Oh. All right, so 10 pips up so far. If you want. Close some if you want. You don't want it to break this high now. You can bring your stops down. I closed 50% here at 10 pips. Now I'm gonna stops at basically break even. Can't lose now. Hopefully now this hour candle can close with a big wick down. As in like, you know, the body of this candle can close with a big wick. Hopefully. But if it comes up to the entry a third time above here, then as Terry said, it could go higher. But now what would be nice is if we create a support, break this low properly. We broke in the first like couple seconds, wick up a little bit, break this low again, then that'll be beautiful. Just don't come up all the way to here. Just stay down there. Because it is, it wasn't aggressive, but it was aggressive, if you know what I mean. If this was a fake out, that's as high as we want it to go. Don't want it to break the high of this candle body, because this goes big body up, small body. So if it's breaking above here, it could go higher. But if we want this to go down, then we want this to be the resistance candle. We want this to form a little tiny bullish candle or another bearish candle to confirm that resistance. Was that a liquidity grab to bounce off Asian 50%? That's what I'm hoping it is. Hoping that it's just a bounce for the time. We're getting close to 11 AM UK time. Often that's the time that the high of London can be put in. Now this could be the manipulation of that high. And now we can start to push down my target. I had just the monthly level here, but let me actually put the 50% of the low and the high. So it's pretty much the same area, 1925, if it gets there. If it gets there. Come on, don't do it. It's far enough. I don't want to have to think about another trade. If I don't have to think about another trade, my day's done, and I'm gonna. But if this stops me out up here, I wouldn't have made that much because I closed 50% at 10 pips, but I was risking 15 pips. If it for a second chance trade, what I need to see is a breaker structure. At the moment, the structure is bullish. Can I survive that pullback? Nope. Man, just hanging in there. Oh my god, come on. 0.8. 0.8 is my spread. Hey Ivan. Oh, I'm out. Okay. So, made technically 5 pips. It was worth a shot. It was worth a shot. 5 pips. Serious? Oh, you're on the UK side. Yeah. Far out. That's... Different brokers. Different brokers, Terry. I'm paying commission though as well. So on commission brokers, you'll get less spread. But you'll pay, like I pay $7 per lot. US $7. So if I left my stop above at 31, I wonder if it would have survived. It was in the time range for London High to have been put in, but obviously, like it, you know, we got the little reaction. We got a reaction of 10 pips. I think it got, like, depending on where your entry was, and a little 10 pip reaction. I was hoping that was going to be the top, but it clearly wasn't. Oh, now look, it's probably going to where Mo was saying 1933. 1 hour close. See, what I was visualizing was that this 1 hour was going to close with more of a wick, but it didn't. So let's see if this London High. All you can do is execute on things that. Oh, there's a little imbalance here as well. Lower. Oh, sorry. You're right, Miran. My bad. Sorry about that. I think I just dragged from Friday. I forgot to change the name. So now the next point of interest on the 5 minute is this liquidity candle. Never been mitigated. How about the doji before that to the left? This one here. All of these will be POIs. But the thing with this one is that if this was liquidity, so this one spiked up, grabbed liquidity. So what it gathered was a lot of buy side liquidity, sell side liquidity inside of this candle, and then price came back up, and then retested it, and then had that sell off. So grab liquidity, and then once it grabs liquidity, does a retest of that liquidity, and then sells. So there could be inside of this wick a second batch of orders to go down. This one potentially has been mitigated, yes, but this one here hasn't. And because it's closer to price, I'd watch what it does at this level. But we've got it imbalances here. That was the 15-minute imbalance. The 5-minute imbalance is this candle. So now what is it doing? Now, for me to give this a sec, this was my entry. Oops, hold a second. This was my entry that I was willing to take a bit more of a risk on. First touch at this area, back that was over to the left. Now, if I want to be more steady with the giving it. This could just be healthy pullbacks, yeah. So now what I'd want to see is an actual shift in structure. So I want to see not just double tops, but I want to see like a previous low broken, like this guy. Or if price can come up and go up, and then it will turn to this one. But I need to see that now. This is just still on bullish structure. So you got, it's just continuously printing higher highs and higher lows. So it's just pulling back. It's like we haven't even had a deep pullback yet. We've just been pulling back to basically first structure. So I'd like to see something fail to break or more manipulation. So like something like up here, and then something to lead to that. And I was really hoping that was going to lead to a shift in structure. I was really hoping that was going to push underneath, like here, and then it will give us more opportunities to get into that trade along the way, back down to the 50%. But it gave the pullback, gave you 10 pips, and then just came back up. So right now it just makes sense to continue going higher and higher. So don't put your face in front of that again right now. Looking beautiful from down here. Far out, just like clean candles down, clean candles up. Yeah. Yeah, when it's ranging reversals. Okay, can we catch it, Todd? I'm tempted to have taken something around here. I'm going to give this one more shot. Just push up a little bit higher. I'm in. bullish candle looks like order block. On which time frame? This one here. Yeah, okay. Reason I did this is just because I'm looking at that wick up. I'm just testing the waters to see if that was the shift in structure and that this was the pullback. Yeah, M1. 1 minute, yeah. I'll manage this pretty aggressively though. As you're right, it is a little bit aggressive. Let's go, boy. This is the danger zone, this wick. If we can close underneath this, I think we're okay. Well, I'm okay. There's one more push. Oh no. Come on. Come on. I'll catch you. Once we get a close underneath this green line, I'm going to bring my stop to break even. I'm not going to secure anything though. But I'm going to stop. I'm going to, because if this closes under the green line and now starts pushing back up again, I'm not interested in holding that. Yeah, the hands are there to catch gold. Come on. She's a little bit scared. She's tired from pushing up all this way. She's just taking the breather. There we go. Now I want to see that close. Yep, beautiful. Awesome. Now, when we push into here, I'm around 13, 14 pips up. Just give another little push down and I'll secure 50. So more or less more or less around here, I'm going to secure 50%. About here. Okay, so I've secured 50%. Let the rest run. Hopefully the hands will catch. Target is around 1925.5. Yeah. Now if we drop there, I'm done for the day. I'm gonna go to the gym. My ankle is killing me. I got like just been playing on my ankle, playing rugby, the tag version of rugby, and like on the weekend, just hamstring sore, my ankle is sore, my shoulder is sore. I need to stretch. Oh, don't do it. Come on. Just drop. Anyway, stops are at break even. Target is 1925. Hopefully it doesn't. Maybe this is just the pullback for the new 15-minute candle. So the 15-minute candle is pushed down. Hopefully this is just a candle wicking up. I'll clear my drawings. If we can just make a top wick and then start pushing down, breaking the low, breaking this low, then we've got clean candles to come back down again. And we can just play this range. German dropping as well at the quarter monthly level. Yeah. That was it was a nice buy. That this first one, I really was tempted to take that buy. Then it broke these highs here, and I got cold feet on what to do. And then it kind of did follow that pathway a little bit. And when it came back up, formed the resistance, and that's what I was kind of saying, like, we've got a support and we've got a resistance. Once we have a resistance and a support, ask yourself how big that range is. And then if you can enter as close to that resistance as possible and target like at least halfway, if you can get a good risk reward, then it's worth a shot. Beautifully done, Ivan. Nice work. Oh, which cell did you take? Did you take this cell or this cell or this cell? Oh, up there. Yeah, cool. Good one. Good work, buddy. All right. Any questions? I'm probably gonna scoot. I think that's enough. Hopefully these hands. Oh, GA. Gapped up for daily. We do have this resistance area. Is this a fake out to push back above and go up? 4 hour. Yeah, look at this. There's a beautiful target. If we can get above this resistance, that's a nice little target. Oh, I've got another one here. H1. So this was the Asian high. New York high is just above it. So I think if you can follow, you probably have a reaction from these areas. And then if you're breaking that high again, then this area is a beautiful area to trade between 1754 and 176. 60 pip range. Easy. Now, if we're going to push up and then break support, similar idea of what I just took then. If we want to see a double top or something and a shift in structure for it then, like get in here for then target downside. But it's not going to go all the way down here, I don't think today. I think a healthy target for a pullback could be around this area. So New York might pull back to this area, form bullishness, and then go back up. That's what I'd anticipate.
Can you have a look at the 30-minute?
Yeah.
See those two dojis at the top, basically? How do you read them?
I think they're reacting. They're pulling liquidity from the where the purple and the green are. This is the 50% of that 4-hour wick. So I'd like to see a support formed underneath these dojis for us then to retest the high of that doji.
Okay.
Because we broke the low first. This is a 1-hour doji now. Oh, that's not quite. But because it's trading under, because the doji has made the high, we know that there's going to be liquidity sitting above that now.
Yeah.
So if we form a support under the doji, then it will target the top of the doji before then it can have that sell off. So this is the liquidity here to either pump price up continuously or drop. For it to pump up, what you want to see is a close above it. A close above it, retest, break the high, and we're going up. If we take that high and then form a resistance underneath that high, we're going down. Yeah.
So I was just really confused when the two candles came up. I went, what the hell is this?
Oh yeah. Yeah, it's just it shot up to come back down.
Yeah.
Because of the 4 hour.
Do you just ignore them? Do you actually?
No, that's the that doji now at the top of this wick is going to dictate whether we go up further or down. And where this was reacting was the 50% of this wick. So there's a lot of sell side liquidity pulled into this inside of this wick. So now we've retested it, and if there was enough liquidity, then we can take the high and we can just fall. But if there wasn't as much liquidity picked up, and it breaks the high of this wick, then that means this candle has been mitigated, and now it's going to have to go to the next one. So there's clean range above here, and it will likely go to this area.
Okay.
Yeah.
Not just to the next wick?
Nah. Or maybe they'll have reactions from here because these are previous session highs. But I'd say that the last liquidity candle was inside of here. So keep an eye on what happens at the high here. Gold's dropping now. Look at this.
Yeah, that'll be right.
Why was your stop? Why was your stop here?
I don't know. I'd have to look at me. It had to do with where I entered.
Yeah.
I put it above. I had a 1-to-1 on it anyway. It was just after 20 pips.
Okay. So, hey, Raul, are you here? Are you listening? Are you working? You're listening. So, I faked this, didn't I? Just to our discussion last night. Just faked it. Faked it twice. Yeah, I'm still holding. Yeah, my target's down here. Now it's about to hit my target. Nearly 40 pips up. What I do is, because it is pretty close, it's almost a hit. I'm just leaving the last little piece now to run. That was a 3-to-1. So good work, guys. Congrats if you took it. That's all we really need. You closed, yeah, perfect. You know, just come to the hands. The hands are catching it. I scammed you guys. I scammed you into another trade. Beautiful scam I just played. We scammed the market. Alrighty. So, any questions, guys? Anything you want me to cover quickly before I take off? Otherwise I'm gonna go to the gym/coffee. Come on, hit the target. Just do it for us. Had to give it a second chance though. Let's just run through it again, you know, just a bit of a recap. So tried it here first because we had the double top. Like if you look at it in the past, you're not really sure because you think, well, where was the double top? And that's the thing that I took a long time for me to understand where the double top was. And it could just be one candle that creates that double top. Oh, yes, do it. Yes, there you go. Full TP. That's my full TP was right there. Now I'll probably just keep on sinking, but you know, 50 pip move this time of session is good enough for me. Anyway, so double top here. Most importantly, it was at a point of interest on for my eyes, and that was the 50% of Asian range. Okay, so just to show you, 30 on the Asian range. Get rid of those hands. They don't need to catch gold anymore. Here was the Asian range, and remember how many times have I told you guys that if we take out one side of the Asian high or the Asian low on a Monday, what is it likely to do? It will usually then it's usually the side you want to trade towards. So we closed underneath the Asian low, so it makes sense to trade that direction. Now, you can take counter trend like what Danny took as a trade. It made absolute sense, but that was the trade that I was looking for to trade that direction. Now, all I've got to do is I need to work out where are my points of interest, and you can have more than one. You don't need to stick to just one. But the first one I look at is the halfway of an Asian range. That made a lot of sense. Halfway of Asian range. So I gave it a shot. So that when price rallied up, the cleaner it pushes up, the better it is for a trade. So it came up, hit the Asian 50%, price came up, gave us a double top, did the sweep, and it had a little rejection. But the rejection wasn't enough. It just gave me 10 pips. Still a bit aggressive because it's a Monday, and Mondays I like to secure some profits for the rest of the week. Then once we pushed up and then we broke higher, it made sense to keep on going higher. Now, where was my next point of interest? My next point of interest was using the higher time frame, using the 15-minute. It's not really a higher time frame, but it was where the first imbalance was, the 15-minute, to fill this clean candle. And then if we go to the 5-minute, it can be refined a little bit further, again, a little bit higher. So now what I wanted to see, what I said was that we need to see a shift in structure. A shift in structure as in like, not just a little bit different to the way I talk about structure 1 and structure 2, but we want to see a low broken. So we go to the 1 minute, we get to these POIs, price pushed up, clean candles up, price came down, formed a little support, confirmation of support, second retest of that area. Then we had a break of that low. It's not structure one. Don't get me wrong, it's not structure one, but it's a break of this. It's a break of this low. Then we have a little retest. Get in. Many times I'll hesitate to get in there. This time, twice, pick the high there of that candle and pick the high on that one. You do have to be quick because we had to go. I actually went down to the 1 minute here. And then once price had closed below the green line, you're fairly good. Move your stop to break even, because if it's coming back above there, this is a fake out of this low, and we can keep on going up. But the trading gods gave us the way today. Let it push down. Had a little rebound here, which makes sense because there's a liquidity candle here. So there's a little support. So it makes sense that we can have a little rebound from that support. But the flow had shifted because the time of session is reversal time. And then just dropped beautifully. We caught the whole move in the stream. Not the whole move, but we got from start to where we had, or where I had full TP.
Hi, Jen.
Hey, buddy. Hey, Emma.
Just a quick question. Could you please put the hourly chart, please?
Yep.
Say, for example, I usually do on the hourly chart. I was under the impression that the next candle could be a bullish candle, but it came down suddenly. So what should I consider?
Like this one here. Remember how I was saying that this one, I was visualizing this one to close like with a big wick, because I was waiting to see rejection, but it didn't. It closed quite strong and full. Now, what happened? What have I said as well? When you get candles that close like very close to the top, often the next candle be a rejection.
Oh, okay.
Yeah. So we're anticipating this move because I'm not changing my bias because of one big candle like this. My bias was waiting for that sell, waiting for an area across here that I wanted it to basically, more or less somewhere around here. I was waiting to see some rejection. Now, we just needed to wait for it to get there. And because of the way that when this hour candle was closing in the last 15 minutes, it could have left a wick or it could have closed near the top. But the whole point was that on the lower time frame, we're starting to look at how little by little the lower time frames tell the story. So at the top of this could have just kept on going bullish because the previous candle was very strong bullish, but the time of session is usually around this 11:30. We normally get a reversal around this time usually. Now, for this to be a bit more of a reversal, what we need to see is a shift on the lower time frame. Because once we start to see that shift, then there's a high probability that we're going to have a deeper retracement. And then once we start getting below halfway and start forming resistances and keep on breaking supports, then it makes sense we can go even lower.
Okay. I won the bullish trade but lost the bearish one.
Oh, you got in here, did you?
Yeah, there I got it.
Oh, so you got the same traders like Danny.
Full until then, yeah.
And then where was the sell for you?
Just there at the blue line.
You took a sell here.
Yeah.
How did it lose?
No. I didn't lose that. There I took a buy.
Oh, you took another buy. You took two buys, and then it moved down and stopped you out.
Yeah, it moved down, then I lost that.
Oh, okay. So if you're buying here, your closest support is here. So you're so far away from that support. So once you move away from support, same thing here. If there's a resistance and price has already traveled so far down, And if you're entering sells here, it's dangerous because your resistance is all the way up here.
Okay.
So you'd want to see, if to buy, what you'd want to see is like price to push up, form another support to then push up from, and try to trade it close to that support. But there's no support here. When you have clean candles, price can just go up and down, up and down.
Okay.
So the trade here made sense because you created a support and you're close to that support and you're close to these supports. The trade here, you're very far away from these supports.
Oh, all right.
Yeah.
Okay.
So your stop loss or is going to be it's going to be somewhere that price can easily take.
Yes.
Yeah.
Okay.
But well done on this one. That one you can take a lot of learning from. And then this one here as well, we can review that and then say, try think about where support and resistance is formed on like lower time frames. We'll cover this. We'll cover this again. But this one here, you're too far away from support.
Yeah.
You can scale in, but you need to be usually, like if you're entering a buy, say here, and price goes up like another 20 pips, you probably should close that one.
Okay.
Yeah.
All right.
Because now you're getting close to resistances, and like price is rejected here before many times.
Yeah.
And they could always reject it again.
Yeah. Okay. Wonderful. Thank you, Hayden.
You're very welcome. Alrighty. So, nice to give it a second chance. Oh, good one, Marion. yeah. I mean, that's what happens. I mean, look at just kept on falling, but you know, it could have just stopped here and came back up as well. So I'm happy with 50 pips for a Monday, giving it a second chance. Yeah, you know, that's trading. Very rarely you'll pick the top and the bottom, the perfect bottom, but I was happy with where the entry was, and I'm happy that the trade just closed out where I was happy to get out of. Whatever happens after that, it's irrelevant. Can't control that. All you can control is where you get into the trade and where you get out of the trade. That's what you can control. Yeah. All right, so you guys kept me company for the session. It was a beautiful session, so really appreciate it. Thank you very much. Thanks for your words and support as well. Really appreciate it. There's so much responses. We've got like, you know, around 100 people in that group, just all on the same page, you know. So that's amazing. That's what an interactive group is, and that's what we were going to learn from. Yeah. All right, so I'm not streaming tomorrow. This week I'll stream Monday, I'll stream Wednesday, I'll stream Friday. All right. And, hey, Yaji, 12F. I'm almost back to break-even point now. Hope it goes a little bit more up. What was happening? Was there a couple losses earlier? Was it the manual trading? Or was it the... Oh, okay. Yeah. FOMC. Yeah, we've got FOMC on Wednesday. So maybe that's not a good day to trade. I might start the stream earlier on FOMC because... Or we won't trade gold on FOMC day because it'll probably just do nothing until FOMC. But maybe we could trade one of the currencies. You bought in at 19. Oh, that's where Danny was. That's where a lot of people actually bought from here. Yeah.
Hayden.
Yeah, mate.
On your chart, why does gold appear to be XAUUSD or something like that?
So XAU is the symbol for gold on the metals chart, and then it's crossed with when we trade this pair, you're trading against the US dollar. So XAU is like, you know, AU is the metal name for gold. And AG is the metal name for silver. You trade it against USD. But pairs, when you trade pairs, like Forex, it's a 3-letter symbol.
Oh.
So they put X in front of it.
All right.
Yeah.
Okay. Thank you.
Yeah, you're welcome. Because like most charts, you're trading this, but literally, I could trade XAUUSD. So we could trade gold versus Aussie dollar. The chart will look very similar, but you'll see the scale on the side, instead of being 1900 and something, it's 2700.
Okay.
So much more volatility on this pair. That would be pretty crazy. The spread will probably be higher too.
Oh, okay.
Yeah, but that's what it is.
Yeah.
Alrighty. Well, thanks everyone. Okay, I'm gonna scoot. So I think we had a wonderful session. Now take it easy. Don't overtrade. Trade safe. And I'll see a lot of you tomorrow, but I'll see the YouTube audience and majority Wednesday. Okay. Okay. Bye bye. Thank you.